All right, traders, it is the 11th of June, 2017. My name is Jameson. Welcome to Behringer Trading. We are looking at quiz number 3, and the ticker is actually CF Industries Holdings. Ticker is CF. So what am I trying to achieve by showing this chart? I've asked if this is going to break down, trade laterally, or trade higher. And I just want to kind of create a bias or show an observation so that traders can be on guard to have a bias. So ideally, I like to have a bias, and then when price confirms my bias, and that would generally advocate an entry that we have. So one is that we have a climactic volume that's here. So this might be a selling climax that's present. And this isn't meant to show you in the context of Wyckoff. But what we do is we have a very bearish session here, climactic volume, and what do we have? There's no follow through lower. We actually rally back up and retest this prior level of support. Now the bearish thesis is that this is still we're confirming our prior level of support as resistance, and then we break back down. But the character of this breakdown here, narrowing price spreads, there's not a lot of selling supply, suggests that the selling may have stopped. This may have been a climax. Additionally, we have a higher low, so that generally means that buyers are getting a little eager to enter purchases because they don't want to wait for it to come back down. But something else that we have here is that at this episode here we had the emergence of demand, and it didn't break this level of resistance, but we do have a higher high, and then it was reversed. We confirmed this short-term level of support as resistance, and then we gapped down, and we gapped down on a lot of supply. So you have to ask yourself, if this is bearish and this is a bearish reversal and there's so much supply, why didn't supply break this level of support? This is a big effort, little reward. This is Wyckoff's third law, effort versus reward. So there's a big effort put to the downside here that was unable to break support. You have to ask yourself, if such heavy downside pressure went into this session, why didn't it go through here? And it's because there's buyers as present. And then I include this next vertical bar because it's an inside bar. So the short-term trend is lower. So we have two things, this big effort, little reward, and this inside session, which is a sign of a possible short-term reversal. Now this is something else that I didn't share with you during the quiz, but this is why I put an emphasis on it when I'm showing my charts. And this is relative strength, not an RSI, a relative strength index, but the relative strength of the holding compared to its industry and compared to the sector that it's in. Or actually in this one, I correct myself, the Vanguard Total Stock Market ETF, and then to the industry itself. So this looks a little flat and isn't quite as telling. But if we look at the relative strength relative to the market and relative to its index, we can appreciate that we had a higher high, and that actually if we draw a line through here, it looks like we're actually confirming prior level resistance as support. So we're starting to see some relative strength that presents. Additionally, we can appreciate that the material sector is starting to get some participation relative to the market. So if there's some potential downside, or if we're starting to stabilize in prices here within the equity, and the sector, the index and sector are starting to see some participation, money is generally going to look for outperformers, and then those that may have present some good deals that are there. All right, traders, so now moving forward, fast forwarding here a little bit, we can appreciate the actual price action and how things went. So here's our accumulation, here's our markup, here's our distribution and a markdown, and now in the process of confirming this prior level of resistance as support. So this actually is a very attractive chart on a weekly chart. But let's come back here. This is that key session that we had where it looks like a little climactic. We consolidate through here. We have the emergence of demand, which we highlighted. And then as prices broke down, here's the big effort, little reward. Here's the inside candle that presents. So that might be a short-term reversal. And then now we can appreciate that prices rally through this, close this gap, and then through here on expanding demand with increased ease of upward movement, closing at highs. So it's difficult sometimes to get a proper entry just using a Wyckoff methodology. But from a basic trading perspective, if you're keen to these observations, then you know you have a lower risk entry that you can actually buy support here and anticipate a selling in the resistance and then make it close you out of a trade. So potentially traders could enter this here, or you'll allow demand to overcome supply, and then you buy this back test, because here in this back test here, there's no supply. It's in strong hands. And then the ease at which that we continue to trade higher is on expanding demand with increased ease. And we really don't have any supply until here. So this is probably the point at which traders should get stopped out, because this is the inflection point, or the point at which the invalidation point. And then actually, when this actually breaks down, we can appreciate that we lose this level. So this is a sign of weakness. And as we attempt to rally back up and re-achieve it, we're unable to do so. There's your last point supply. So this is where you start to get your bearish bias, and you should close out all your positions. So I hope you find that helpful. Good luck.